Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me right now is Verdence Capital Advisors CEO Leo Kelly. Also with me is Mitch Rochelle. Leo, thanks so much for joining the conversation this morning.
Great to be here, Maria.
And Mitch, I want to kick it off with you with the big story of the markets yesterday, with NVIDIA selling off, finishing down 6% on the session yesterday, 6 2/3% lower. That's the third straight declining session, and the biggest one-day percentage decline since April. These last 3 days for NVIDIA erased nearly $430 billion in market value from NVIDIA's market cap, sent the stock into correction territory. This morning, the stock is actually trading up, Mitch, fractionally. I think it's up about 2%. Yes, there it is. NVIDIA trading higher after the 3 days of declines. Mitch, your reaction?
I think that's the correction that everybody was waiting for. It's down 12% from its high. People who wanted to get into NVIDIA that thought it was pricey have sort of been waiting for this moment. So I'm not surprised to see it up today. I think the thing, listen, it gets trashed a lot. People start talking about it being a bubble, comparing it to the dot-com days. But just, some facts. Net income for the first quarter was up 600% year over year. Net profit margin up 100%. Revenue up almost 300% year over year. This is a company generating a tremendous amount of free cash flow. And I think, there's a reason why it's the hottest stock out there. So I'm not surprised, people decided to take some profits off the table. But I think there's a lot of money on the sidelines that's going to get back in.
Yeah, Leo, what about that?
Well, I think Mitch hit it on the head. NVIDIA, the country. We're starting to look at NVIDIA as the market. And just like Cisco or Microsoft back in 2000, we're starting to see the market as a whole, the valuations in the market, reach some pretty lofty highs. And we're getting excited about that small group of stocks that are driving it, and the market's being pulled along. We have said over and over again, and while the market has continued to go up, we have said over and over again, when markets get to frothy levels and I start to hear things like it's different this time, or these valuations should be higher because of X, Y, and Z, NVIDIA aside, I think it's time for investors to be disciplined and make sure you're paring back gains, holding cash, because markets do not go up forever. They just don't. There are corrections, there are pullbacks.
Especially in a backdrop of where we are with an economy that is slowing, Leo. Treasury Secretary Janet Yellen unveiled a new slate of financing initiatives. She says that will support housing development. It includes $100 million specifically for affordable housing over the next 3 years. Yellen is calling on several agencies to help finance it. Watch this.
In line with the Federal Housing Finance Agency's report and the President's proposal today, I call on each of the federal home loan banks to work to voluntarily direct 20% or more of their net income to support housing programs and to prioritize new construction.
Yeah, they're trying to do as much as they can around the edges to make this economy get a boost. But look, shelter inflation is up better than 21% since President Biden took office, Leo. And we've seen all of the inflation metrics that are still elevated right now.
Absolutely, and here we go again. We're going to start to write loans at lower credit quality, and we're going to have less down payments. This started the problems in 2009. I think when we look at the economy, there's a lot of mixed signals. It's a weird economy in that if you want to be a bull, you can go find bullish data, and if you want to be a bear, you can go find bearish data. At the end of the day, inflation is incredibly stubborn. The Fed is struggling because while they want to lower rates and stimulate, they can't. And inflation's not going away. It continues to be persistent, especially as the Fed pauses. So I do think they have a little bit of an uphill battle to climb. And on top of all of this, we just saw the CBO come out with their estimates for deficits for the next year and next 10 years. And as we had discussed earlier in the year, the deficit is going to be much larger than was anticipated originally, but we knew that was going to happen because of all the spending. So we continue to have, Maria, a situation where we're doing massive deficit spending. We're increasing it in the face of inflation, and we have too much money supply. Really tough spot for the Fed. I think the economy continues to really run that line of trouble versus survival.
Yeah, I mean, so many former Fed presidents have said that. You know, Mitch, you've got, Jay Powell trying to rein in inflation, but at the same time, he's faced with this tsunami of spending. You know, Thomas Honig has spoken about that. We're going to talk with James Bullard, former president of the Fed, coming up. I'm going to talk with him about all of this stimulus money. It's too many dollars chasing too few goods, Mitch.
And the Fed's tool of destroying demand can only do so much. And it's an economy killer. This is a fiscal policy, that we need. And the next Congress and whoever is the next president, if they don't find a way to rein in spending, this problem that our kids and grandkids are going to inherit is going to be catastrophic.
Yeah, well, a lot of people tried to do it, unable to do it. Kevin McCarthy was there as speaker trying to do it, to no avail. Leo Kelly, it's great to see you this morning. Please come back soon. Thank you, sir.
Thanks, Maria.
All right, we'll see you soon. Mitch, you're with us all morning, and we're grateful. Quick break, and then the